Welcome to Talking Stocks. I'm Nozi Pombanjwa, and in studio with me is Ashton and David Gibb from Anchor Capital. And today we're talking MasterCard, an American multinational financial services corporation which had an initial public offering on May 25th all the way back in 2006, coming in at $39 US. Sean, let's start off with just the business model and how MasterCard operates.
So this is effectively a payments business, and the attraction of that is that it's very capital light, and ultimately what they're doing is they're acting as an intermediary between the ultimate customers, being the guy who's swiping the card, and the merchants, and they're taking a small clip as a proportion of the payment value of a particular purchase. So quite capital light, there's not much employment of capital on their balance sheet, and they're acting as an intermediary. So it lands up with quite a high return on equity, which is a key attraction of the business model, north of 50%.
Absolutely, and we'll get to the numbers in a second, but a quick one, David, if we just take a look at the cards and payment space, there must be some certain trends in that space that are shaping the way in which this business and the business model is being affected. How are you reading that landscape?
Right, so I mean at the moment, globally, I think about 85% of payments are still cash and checks. So 85, that is a big market for them to feed into. Now it varies a lot by country. Some countries like Japan, there's a tendency to use cash. Other countries like Germany, the retailers don't like to pay the little charge that the card, when you swipe the card. So it varies a lot by country, but there's some, generally you would argue that the convenience of using a card and not carrying money around in your wallet tells you that the long-term outlook for anything to do with plastic is very good. So this has been seen as a true growth company for many, since listing really.
So you brought us to the growth issue, so let's quickly jump then. We might just jump around a little bit, but in terms of their growth objectives, Sean, let me pull that up and let's maybe move to the growth, the longer-term performance objectives of growth, where we see their net revenue, compound annual growth rate and all of that. Talk us through some of those numbers.
Okay, so I think the first point to make is to have an idea of the geographical split. So this is a far more global business than some of their peers. If you look at something like an American Express, which operates right at the top end of their customer base, a very US-centric business, where you would argue that perhaps it's a more penetrated market, the growth rate would be slightly lower. And Visa is also slightly more US-centric. So this has got about a 30 to 40% US penetration, not penetration, share of their revenues, and the rest is quite global. You've seen Asia Pacific growing quite quickly. What's happened to their business over time is that since listing, they were able to achieve quite a lot of pricing power, which really means that they were taking a greater share of the actual purchase amount as a commission, their little cut. So that's been rising from, call it 1.5% to 1.8% to about 2%, just north of 2%. We don't think there's much potential for them to necessarily up their pricing power somewhat, so it's more of a volume game. But when you look at the US market, they're still generating volume growth of probably 7%. And 10 to 15% outside of America.
Where does Africa fit though in the picture? Are we, African emerging markets broadly, are we going to see them attract more volumes out of that particular market?
Certainly, I think you would expect to see more volume growth in African markets as banking more generally formalizes and people adopt plastic as a greater form of payment usage. But ultimately it's still quite small in the mix. And I think globally, it's important to understand the metric that David mentioned. Even if taking into account all the developed markets out there in the world, you're still talking about an 85% cash and check mix in the overall mix. So they don't need smaller jurisdictions like Africa to necessarily shoot the lights out. They just need to get a bigger share of overall consumers' wallets everywhere. So the volume picture is very strong. We're talking high single digits in America, double digits elsewhere, without any pricing power. So quite a nice, so that should get you to kind of 10% top line growth. And then a little bit of margin accretion together with the ability to buy back shares. Remember, this is a business that generates significant cash flow, should lead them to mid-teen bottom line EPS growth. Now that number has come down a bit from from their previous targets. They were sitting at about 20%, still very strong growth numbers.
Yes.
But now we're looking at an outlook of kind of 15% compound growth for a while.
15% outlook. David, how does this compare with some of their peers and their competitors, especially given the fact that, as Sean is saying, there isn't much room to play with price increases to see further growth into the future?
So, I mean, if you compare them with an American Express, which is top-end US customer focused, but also, you know, very much a card business, there's more pressure on the take rate that Amex, because Amex charges more. So a lot of merchants won't accept an Amex card. If
more than double, I think it is. Yeah.
It would be more than double. So, whereas, you know, a company like MasterCard, Sean mentioned about 2%. Now, that's what the bank as well as MasterCard will share. MasterCard actually only takes 21 basis points. So if you're spending R1 on your card, MasterCard will just take less than a cent on that. So they take that small amount. There isn't really much price pressure for them now. I would say, look, there is regulation that's setting in certain markets.
Yes.
In Europe, in South Africa, we've had some regulation in Australia too. But you find that the banks tend to take more of the price pressure.
Absolutely.
And not the network company Visa or MasterCard, because somehow they've managed to avoid the pricing pressure.
So regulation, not so much of a red flag for them, Sean, but are there any other red flags that could impact on their future growth potential?
There's nothing specific that I can think of. I mean, ultimately, I think the backdrop, the structural backdrop of growth for these companies is very strong. I think the bigger issues would be facing something like an American Express, where already the proportion of the merchant revenue that these guys are ultimately taking is becoming a big number in their lives. And specifically in a low growth environment, you might find, especially when a lot of other banks are trying to undercut and gain volume growth, your very high cost solution like an Amex is where a lot of the pressure is being felt. So I think MasterCard's probably on the right side of that, I would say.
MasterCard on the right side of that. I mean, we also know that they're quite active when it comes to pushing for financial inclusion and those sorts of issues on the African continent. There might just be opportunities there. How do you read that space? And Sean, and I'll get to you, David, as well on that. Again,
I think Africa is quite small in the mix. So I mean, we wouldn't necessarily be focusing on Africa as a reason to buy MasterCard. It's a nice benefit to them, but ultimately it's not going to materially move the needle versus the rest of the jurisdictions. So the financial inclusion
case not strong enough for MasterCard. Would you read the same, David?
Yeah, I think for now, obviously they've got to invest for the long term. So they've got a number of initiatives. They're doing work in Nigeria. They start often with a debit card. And so you want people to get used to using cards. And then when a population becomes more banked and everyone opens bank accounts, then you maybe shift them to, possibly to credit cards as well. So they'll be doing a lot in India, Nigeria. The Chinese market is also opening up. So that market up to now has been controlled by the Chinese network called UnionPay. And now that is set to be opened up, and Visa and MasterCard will try and get in there as well. So they basically want to try and take a bigger share of the global wallet, and they've got to invest for the long term into different markets.
David, are there any exciting innovations that we could see coming through that could actually further improve the outlook that we're already seeing for MasterCard?
So I think one of the things that's interesting is near-field communication. So things like Apple Pay. Now, Apple Pay will largely work off MasterCard and Visa. You will obviously input all your card details and they'll be embedded in a sense on your phone. But it's really about improving the convenience factor. So what we really need is for the frugal Germans to now move away, or certainly for their merchants, to say, yes, please use an Apple Pay. You can use your phone, because maybe the take rate will be quite low in a regulated European market. And let's get the convenience factor up. So it's very interesting to watch what happens with something like Apple Pay. and whether people just start using their phones to pay more and more as opposed to what they would have done on their old cards.
And of course, Sean, like listening to David, one also gets the sense that just the play on mobile and using that as a platform to access a product like that is based on MasterCard or Visa or any of the other competitive is obviously increasing and on the rise. Any innovations on the horizon that you're keeping a watch and saying this could have an impact on the MasterCard business model?
There's nothing specific, but I think the point to make that I can identify, but the point I would make is that a lot of people may regard an Apple Pay as a potential threat to the card companies, but ultimately when you look at all of these platforms on which you're making payments, in many instances you're ultimately still using your credit card. So I do a lot of personal transactions on via Apple, but I'm still using my credit card to make those payments. So I think that ultimately once consumers continue to adopt or become more increasingly comfortable with the idea of using plastic rather than cash, that's going to be a benefit for these guys.
Well, that's the analysis on MasterCard. Let's get our experts now to give us an indication of whether to buy, hold or sell the stock. So Sean, what are we going to go with, buy, hold or sell?
So I'm going to sit on the fence and call this a hold. I think it's a fantastic quality company. The rating's still very high, so it probably trades, if you take into account this year's growth numbers, it's probably trading at a forward 25 PE, which is quite high. It's a fantastic quality business. The growth profile is not what it used to be. So it's coming from the 20% odd growth rate to kind of teens. It'll be slightly less this year, but largely because of foreign exchange headwinds, which we would expect to wash out. But ultimately, we've also got to be careful about getting too negative, because the growth rate for many companies is slowing down. So in relative terms, it's still doing...
In context.
In context, I think the growth rate is still very strong, which would justify a premium rating. We believe that $80 would be a decent entry point into the stock. It's probably trading at around 90 at the moment. So it's one to certainly buy on the dips when you see market weakness. This is a fantastic quality company, but slightly expensive at the particular moment in time.
Slightly expensive. David, let's get your take. Are you going to stay on the fence or are you going to pick a side?
So no, I'm actually with Sean on this one. I have it in the Anchor BCI Worldwide Flexible Fund, a fund where I'm the manager. I have about a 2% weighting. I have bought in this recent correction. So I bought it just over $80.
Right.
So I'm not a buyer at $90. So it is one of those things, it's a well-loved company. And it's going to tend to trade at a fairly high rating. But if there is a correction, which we've had in January and February, it's a good time to buy in. So I am also just a holder at 90, but looking to buy more at lower levels.
Well, certainly the hold decision seems to be the dominant one coming through. A very big thank you to my guests, Sean, Ashton and David Gibb from Anchor Capital, walking us through, of course, MasterCard. And that brings us to the end of the show for this week, I'm afraid. Do catch us again next time with Gugulethu, Cele. Until then, it's goodbye.